Today's top picks from Reuters Breakingviews. Spain faces a long summer with the cost of the banking bailout not clear until September. And France may find itself somewhat lonely at next week's EU summit. With me now to discuss these stories is Reuters Breakingviews' Chris Hughes. Chris, thanks for joining us once again. Let's start with the Spanish banking story then. So we think we know it's about 62 billion euros, but this is by far from the end of it.
Yeah, I mean, sadly, when you get these stress tests in Europe of banking systems, what you would want to see would be, a clear number and then a clear plan for how to sort of make good any shortfall. But yet again, we have a European bank stress test which is kind of inconclusive. So at the sort of benign end of the range, you've got a figure of sort of 25 billion euros up. Then that goes up to 62 billion. Now, if in the market, people are talking about 100 billion euro shortfall for Spanish banks. So there's already some sort of credibility issue there. But the actual final number isn't really going to be known until September. There's going to be another round of kind of testing, and then what's particularly concerning is that the banks are going to have sort of nine months to fix it. Now, hang on. I mean, where is the sense of urgency here? I mean, are people aware of what the markets are worried about here? So
okay, well, let's pick that apart then.
Really
so the first thing is the fact that you've got 62 billion out of a possible 100 billion. So have they effectively put as much money in there that they think will cover it throughout the two assessments, if you like?
Yeah, I mean, there's a concern about whether the scenarios are sufficiently bearish, but also there are some other kind of quite lenient aspects to it. I mean, to pass a test, the banks have only got to maintain a core capital ratio of sort of 6%, which in these times is sort of considered pretty low compared to other regulatory norms. So, does this inspire confidence that Spain is really getting a grip? No, but I mean, it's just going to take time. But I suppose by being given time, banks may be able to sort of say they can use retained earnings to sort of get there. But yet again, another stress test that doesn't give you a decisive feeling at the end of it.
So coming to this timetable then. So the timetable, September we get the figures. They have 15 days to come up with a plan and then 9 months to implement it.
Yeah.
I mean, one does suspect that other events might supersede what's going on in this process, and this is just a European sort of delaying tactic.
Well, I mean, that's always been the case, isn't it? That in the end, it's actually the markets that kind of drive the agenda and policy in the end. So, I guess you could say it's good that the exercise is being performed and that a process is underway, but it's disappointing that it's taken so long.
Okay, let's move on to our other story of the day. Reform denial putting Hollande in a minority of one. So, okay, let's play devil's advocate here. Most people think that if you look at the EU, Germany is the one obstacle to this fiscal integration, or at least the Euro bonds. They want the process in place to make sure that everything's safe so they don't end up paying more. You're saying it's France.
Yeah, look, today the focus, you've got this little mini European summit, and what everyone's focusing on is whether Germany is going to budge and allow measures that will basically help Spain and Italy access the capital markets and sort of end the sort of funding freeze that they're suffering by allowing direct injections into their banks, by loosening the criteria for bond buying in the market, the secondary market of their debt. But actually what we're saying is that where you want to be turning your gaze is on France, because there's no evidence really that France is really sort of getting a grip in terms of its own reforms. I mean, it's still got very high public spending, and it's pretty uncompetitive in the labour market. So,
but they're saying we can meet all our fiscal goals and all the rest of it without any further reforms.
Well,
so
actually,
that's the nub of it.
The real challenge here, what we're saying is you've got to drag France into this reform movement, and it's not happening. So, if all the headlines today about helping France and Spain, helping Italy and Spain, overcome German resistance to supportive measures for them. Look, no, the real issue is getting France to wake up to the reforms that it needs to implement.
Do you think if Merkel budges, as seen as the big obstacle, will she be able to persuade France, or is it for the peripheral nations to persuade France? Is it Germany that will push them effectively?
Well, right now, President Hollande has got a sort of, is going through his post-election honeymoon, and there's a lot of. And Merkel is sort of, resisting like mad, all the pressure to budge. It's not clear how it's going to play out, but ultimately, it's hard to see how France can indefinitely kind of resist the pressure to reform. It's just going to have to in time. Maybe Merkel is one to make it happen faster.
Okay, thank you very much indeed for that. That is all for now. My thanks to Chris Hughes. For more agenda-setting financial insight, watch our US Breaking Views show every day at 12:30 Eastern, 17:30 BST. I'm Nigel Stevenson. This is Reuters.